All right, everybody, we'll get started. I'm John Hass. This is Matt Bathke. We're going to talk about different cryptocurrencies, mining, that kind of thing. We figured since the price was increasing so much, the interest was getting pretty high. We're not investment people, so take what we say with a grain of salt. Go ahead.
All right. So what we're going to talk about first is basically the top 5 cryptocurrencies. There's actually over 800 cryptocurrencies, and they actually just topped today an overall value of over $100 billion worldwide. So we're just going to touch on the top 5. The top 5 have a combined net market cap, which is a market cap is the total market value of every single coin. It's market capitalization. So they have a combined market cap of over 80 billion for the top 5. So first one is Bitcoin, which has been by far the most popular. Its value today, I think, was over $2,900 a coin at one point, and then it went back down. The Bitcoin itself went public in 2009. It was pretty much the first peer-to-peer digital payment system. The transactions are done between users directly. So for instance, if I wanted to send John Bitcoin, it would be from me to John, and there'd be no intermediate third party. All transactions are public, and they're contained in the blockchain. They weren't the first to think of the idea of the blockchain, but they were the first to implement it successfully with cryptocurrency. They were the first decentralized digital currency. Their total market cap is 45 billion. Their daily trading volume is about $2 billion per day. So they're looking at about a, 10% or 5% daily trading volume?
I don't know.
That's about 5%. Bitcoin was initially designed for a replacement for third-party payment systems on the internet. So the idea is that you could have a digital currency that was verifiable and basically fraud-proof to replace credit cards. The online credit cards actions are very prone to fraud and chargebacks, so that was a big driving factor for the initial development of Bitcoin. Bitcoin transactions are more like cash, but for a digital situation. They're very difficult to counterfeit. Network miners, the people who actually generate the Bitcoins themselves, and also confirm transactions. They receive Bitcoins as a reward for their work, and they also receive Bitcoins for a fee that I would pay to do a transaction. So if I'm going to transfer somebody 1 Bitcoin that's worth $2,900, I might add on a transaction fee of, say, $5 to make that transaction go through faster. Basically, that fee makes you get picked sooner. And here is the value for the past year on Bitcoin. You can see that at the very left side of the chart, it was right around, 500? Just under, or no, 750.
Yeah.
And then towards January of this year, it was right around 1,000. And now in June of this year, it's almost at 3,000. So you'll see a pretty steep uptick. And actually, if you go back all the way to 2009, Bitcoin has a tendency to do what they call an S-curve. So it goes up, down, up, down. So they're thinking right now Bitcoin is in the upswing of a bubble, and then it'll burst and it'll drop somewhere in between where it was at for its previous steady point and its recent high. So Ethereum is a blockchain-based coin similar to Bitcoin. Where Ethereum differs is it's based on a little bit different style of network. Ethereum has what's called smart contract functionality to essentially facilitate online agreements and contracts. Ethereum also has the Ethereum virtual machine, which runs the said smart contracts. The network came online on July 30th, 2015. So this coin is actually the second most popular coin for market value, but it's only not even 2 years old. Then Ethereum network forked in 2016 to Ethereum and Ethereum Classic. So if you're actually looking at coin now, you'll see Ethereum, and you'll also see Ethereum Classic. And Ethereum Classic is worth like $16, and Ethereum itself is worth like $260. So there's a pretty big fluctuation there. But the actual network behind it forked to Ethereum, which is the major, most popular network, Ethereum Classic, which is the older, less desirable network. But Ethereum has a $24 billion market cap. So all the Ethereum's Bitcoin or Ethereum's coins were put together, be worth $24 billion, and they have a $600 million daily transaction volume. Ether or ETH, it's actually also called gas, and I'll explain why that's called that in a second, is used to pay for the transaction fees and then also the computational services on Ethereum's network. The computational services are provided by the Ethereum virtual machines, which run the smart contracts, which are the work, and then you can also schedule that work to be performed now at a later date or upon certain other intervening circumstances. The Ethereum network is a distributed computing platform. So basically what that means is it's not a server in a rack. It is a conglomerate of Ethereum miners that make a machine that possesses a large computational power. We actually mine for Ethereum, and we use graphics cards. Graphics cards are very good at doing lots of calculations very quickly, more so than say a CPU. And with this distributed platform, basically the goal here is that they have 100% uptime, and it's not monitored by any third party, so there's no possibility for censorship. There's safeguards built into the network to prevent fraud, and there's also, since there's no third party involved, there's no chance for third party interference. Ethereum, like I said, was about $260 at about noon today. That's per coin. Ethereum's total market cap was $24 billion. Back in July of this year, Ethereum was worth like $7. Go back to that slide once. So you'll see in the last 3 months, basically since March, it's gone from about $8 to $260. So if you had a whole bunch of Ethereum, you're really happy right now if you didn't sell it. Ripple is a little bit different of a coin. Ripple is a coin that was designed for specialized funds transfers. It's more something that a bank or financial institution would use. The real-time fund transfers system is called a real-time gross settlement system, used for currency exchange and remittance. It uses a consensus ledger, not a blockchain. So where Bitcoin has a blockchain that contains all of the transactional information, this basically is a database that's held by each institution that basically goes and sees how many other ledgers agree with that same ledger, and they, as soon as they form a supermajority, they decide that that transaction is approved, whereas the blockchain operates slightly differently. The goal is to provide a secure, instant, nearly free global financial transactions of any size with no chargebacks. So this is something a bank-to-bank would use. So if there's a bank-to-bank transfer, they would use something like this. Like I said, it's mainly used for financial and banking companies. In 2016, at the end of the year, there was a group formed called the Global Payments Steering Group. This is now what oversees Ripple. Members include Bank of America, Merrill Lynch, Canadian Imperial Bank of Commerce, Royal Bank of Canada, and that's just a few of the many members, but as you can see, they're all mainly large financial institutions.
When I was reading about it, about Ripple, I was reading about a transaction that was made between China and Japan, and the person in China went in and gave them, I don't know, however many, whatever the Chinese money is, gave a bunch of that. They used Ripple as the transfer mechanism, and then the other side they paid out in yen or whatever the Japanese was, and it was pennies to send it across the wire instead of the big SWIFT fee that normally would exist.
Yeah. And the idea here is instead of having to go through a clearinghouse like a wire would have to go through, a bank can literally post a transaction to the network of Ripple, and then on the other end, the other bank just gets it right away. It's not where there's a wire room and they've got to, call it in and somebody has to physically type. It's a much more efficient means to do it. Ripple coins are called XRPs. Ripple cannot be mined. All the Ripple that was ever going to be created was created at the founding of the network, and I believe it's like 10 billion coins.
Yep, they're holding half of them.
Yeah.
So half of that are out.
Yeah, and as I said before, mainly only banks and other financial institutions host the ledger databases. Other individual or organizations besides financial institutions that'll hold the ledger databases would be like the coin exchanges. So like CoinDesk might have a database ledger if they sell Ripple. Most currency or cryptocurrency enthusiasts do not like Ripple. It's because it's perceived to be a centralized network because businesses are mainly in control of the network. One of the great things with cryptocurrency is it's decentralized and it's individual user to individual user, and there's no big man in control of anything because it's all community based. So when you go to a centralized network controlled by large conglomerates of businesses, it leaves a bad taste in some people's mouths. But for what it is and what it's used for, it's a fairly efficient mechanism. Its market cap is $11 billion, and it has a daily transfer value or daily trading volume of 135 million. As you can see, Ripple, along with the other cryptocurrencies we've talked about so far, in March of this year saw an uptick, and it was worth, I think, 1 or 2 cents in March, and it went over 60 cents. Or 30 cents at one point.
Yeah, 30.
And now it's at like 28. NEM. NEM was launched in March of 2015 by a group of Bitcoin users that were on the Bitcoin Talk forum. It operates similar to Bitcoin, but instead of using a proof of work,
Proof of stake.
instead of using
Proof of work, you're right.
So instead of using proof of work, it uses proof of importance. So on a Bitcoin miner, it mines, it finds a hash, you get Bitcoins.
I call proof of work, I heard this really good example today. Proof of work, it's hard to get to the solution, but once you have the solution, it's easy to know you have it. So say, for example, you have a lock that has a spinning combination on it. The purpose of the Bitcoin network is to spin the lock to get it to unlock. So the proof of that is really easy. You just put the code back in and the lock unlocks. That's proof of work.
Yep, where proof of importance is a group of factors that basically set your value to the network. And we'll talk about that more in a minute. But it also has multi-signature for accounts, encrypted messaging. On NEM, you can actually send encrypted messages without actually having to send any coin along with it.
No, you do. It costs 1 coin.
No, it costs 1 coin.
Yeah, it costs 1 coin.
That's not what NEM said.
Nope, it costs 1 coin.
Okay. It includes a reputation system to prevent malicious attacks. The NEM network uses a 2-layer structure, so it has the NEM infrastructure server and the NEM community client. The NEM community client would be what the end user would have. The infrastructure server is actually a closed source server that runs to basically facilitate the community client. And the way they have it set up for the 2 layers of the network, it's basically to prevent any external attack that might happen to somebody's wallet that some of the other cryptocurrencies have been susceptible to. The proof of importance, they went with this route because when you mine for Bitcoin or Litecoin or Ether, you are using a ton of electricity to basically do the work to generate the coin. So their idea was if they used another metric, being proof of importance, to basically give rewards out, they would be not causing as much damage to the ecosystem, essentially. The rewards are based on account balances and how much you transact with others and how much those people you transact with others in the network. And you are only rewarded if you have a balance of 10,000 XEM, and that is vested. So vesting is basically after each day, 10% of your balance becomes vested until all of your coins are vested. If you spend any coins, the coins are divided equally between vested and unvested coins. So if you have 10,000 coins, 5,000 of them are vested and 5,000 are unvested, and you spend 1,000, you have 4,500 coins that are vested and 500 coins that are unvested. And then the next day, 10% more will be vested. Once you have 10,000 coins that are vested in your wallet, you can run that NCC client, and that will let you harvest. They call it harvest, not mine, because it's a slightly different mechanism, but it'll allow you to harvest more NEM. It has a $2 billion market cap, and it has a $16 million daily transaction volume. So you'll see that, after the top three, there's a pretty drastic difference in value of the coins in circulation, but it's still $2 billion. It has a daily transaction volume of about 16 million, and it's currently trading at about 22 cents a coin. And Litecoin is nearly identical to Bitcoin. It was launched in 2011. It was actually forked off of Bitcoin. So they took what was Bitcoin and forked it into Litecoin. The difference between Bitcoin and Litecoin, Bitcoin has a block generated every 2.5 minutes. What that allows is it allows for faster transaction confirmations. So the only time you can confirm transactions is when blocks are generated. So if they're being generated in 2.5 minutes instead of 10 minutes, it's 4 times faster. There's more theoretical coins, so Bitcoin is topped out at 21 million. Litecoin is topped out at 84, so it's 4 times as many coins. Uses the script hashing algorithm, not SHA-256. It was originally designed to use Scrypt because they wanted people to be able to mine Bitcoin and Litecoin at the same time. Scrypt hashing, however, is very memory intensive, and it's mainly done on GPUs. So whereas people who are mining for Bitcoin might use an ASICs machine, so it's an application specific
Integrated circuit.
And that machine is specifically designed to mine for Bitcoin. And it does it very well. It will outperform any GPU. But Scrypt mining is not necessarily easily ASIC'd, I guess. It was the first of the top 5 cryptocurrencies to adopt segregated witness. And John can explain what segregated witness is, if he cares to.
Yeah, I mean, there's a big fight in the Bitcoin right now if they're going to fork the Bitcoin client into larger blocks, which allows for more transactions in the 10-minute time, or if they're going to do segregated witness like Litecoin has. And I don't totally have a grasp on segregated witness. I know that the full nodes actually have a say in if a transaction is valid or not, which is not originally how the original designer had built it. So that's about all I can say on that.
Okay. But the main goal of Litecoin, again, was just basically to have a faster network. I did a transaction a few days ago with Bitcoin where it didn't go through for 4 days. I mean, sometimes transactions get stuck because there's so many transactions trying to go through, and it's an issue with the Bitcoin network right now. But Litecoin is designed to be 4 times faster because it's generating 4 times as many coins at 4 times the speed. It has a $1.5 billion market cap, and it has a $370 million daily trading volume. And as you can see, on this chart, if you look at the left, it was at like $5, and now it's at 33. But in end of March towards April, it just basically went up. All 5 of the coins we just talked about, all at the end of March through today, have just gone straight up. It's not necessarily the most realistic long-term projection for the coins, and they might have a correction at some point. But some of the factors that are dictating into this is In Japan, they actually establish markets for trading coins similar to leads trade stocks and bonds. And there's been a lot of outside capital that was not necessarily in the Bitcoin or cryptocurrency world that's been infused, and it's kind of fueled speculation into coins. Because Bitcoin, when did we start? 2012, 2013?
Yeah, something like that.
Oh, Bitcoin was $50.
$20.
Or $20, rub it in.
Yeah.
So $20. So if you invested $1,000 in Bitcoin, you would have gotten
Oh, you do the math.
$20. You would have got 50 coins. So what's 50 times 2,900?
I don't know.
That's a hell of a lot.
Yeah.
So that's basically what's happening now is you've got outside money that's fueling speculation.
There you go.
145,000. So yeah, so 145-fold increase in value in 4 years. I mean, who wouldn't take that? But that's similar to what you're seeing in that uptick. So it's not necessarily the safest investment right now to just dump money into because it is fluctuating quite drastically. But I don't know where it's going to stop.
I'm going to talk just a minute about mining. Not very long. I had other TechKnow about this, and I think it's online even. So, but I'm just going to throw in a couple of things. So, it's the act of creating the coins, generating new blocks by basically guessing the answer to a math problem. Proof of work. That's incorrect. I should say proof of work is the actual only relevant way that mining works. So I'm part owner in a pretty large mining facility. So I want to show a couple pictures. It's actually just down the road from here. If you recognize these buildings, they are not where you raise chickens. They are actual buildings, and they are full of mining equipment. This one here, no, next one. This is fortunately I can't turn the sound on, but it's very loud. This is the one that looks like this is the green building of the buildings I showed. And these are all actively spinning, making coins, or guessing to make coins. That's one building, and then this one here is the first building we did, which is actually a shipping container, Connex shipping container. Aaron did a lot of the work on this, and kind of the same deal. We got racks, so we have power supplies, miners, power supplies, miners, power supplies, miners, all the way down. And the front of this is pretty cool. And it's very.
That problem is actually solving. Like who's?
It's the next coin problem. It's all built into the software. It's the next. They're solving for the next nuance.
So that's sort of the difference between Ethereum and most of the other mining networks. Is Ethereum is designed to be a distributed computing network. So their idea with Ethereum is that they're going to basically make a new internet. So instead of having servers and racks, you're just going to buy time on the Ethereum network. So at a certain point with Ethereum, it's going to be primarily you doing work for others on those computers versus you trying to solve a problem to get a coin.
A good example of that I read about today was, say you needed a voting, or say if anybody's familiar with escrow, you go and you put money into something, and then when both parties agree, the money's paid out. With that, we can actually create a voting mechanism on the Ethereum network that says this party agrees, the coins are then paid to somebody. That's an example of an application. So I'm going to show you a couple of things here. So once you have your coins, you got to either trade them for cash or other coins. So this website's called Kraken, and this is where you can. This is one particular marketplace that lets you buy and sell cryptocurrency. Another one that's called Cryptopia. This one does. On the left here, these are all the different coins that they support. They're by far the largest that I've found.
There's 800
Right.
or over 800 cryptocurrencies.
These-
And there's new ICOs quite often. An ICO is an initial coin offering. So
Yep.
on an IPO, it's an initial public offering of the stock. ICO is its initial coin offering.
And with Cryptopia, like these ones in red here, pink, they're actually in line to be removed. So it's sort of like the creator telling you, sell your coins now because I'm going to get rid of them. And then they also add new ones all the time. This one I just found out about today. It's called Shapeshift. It's called Shapeshift. And what it allows you to do is easily trade for 2 coins. So say I wanted to switch Bitcoin to Litecoin. There we go.
Ripple.
So then we continue, and no sign up, no nothing. I enter my Litecoin address and my Bitcoin refund address. Yeah. Anyways, and then basically I send it Bitcoin, and then it'll send me like Litecoin. I have not tried this one yet. And then I use, for the market data, I use a site called Bitcoinity. So you can see currently, it says 2.834, but that's milli BTC. So it's actually $2,834. And then I have a couple of tickers up here. This one's interesting. So right now it says the price of Bitcoin is $6,000 almost. That is, so if you were in China, which is huge in the Bitcoin market, and I was going to sell you a Bitcoin, it would cost right around $6,000 US to trade that coin, person to person. This uses the exchange. This is the normal exchange rate. You can see they're pretty close, $2,868. Ethereum's at $263 right now, and Litecoin's at $30. A couple more things. So we, like Matt was saying, we just started mining Ethereum, and this is we actually just started doing it today. And so you can see this is our stats. I mean, it's still catching up what we're going to make. We should make, when it's all said and done, our miners should make right around $700 a month after we pay the power bill.
What's the website there, John? Is that tied right into your wallet then?
So this address here, this right here, that's our wallet address.
What's the website you're using?
Oh,
Feel free to donate to that.
yeah,
at
you
any
can send
point.
money to that all you want. Ethermine.org.
Ethermine.
That's one of them. There's quite a few. And then Matt, Aaron, and I also mine straight to Bitcoin. We use Antpool. Our workers are actually based. It's probably gonna log me out. Our workers are actually based out of different, like Washington State and Oregon. So you can see we have like miners in Washington State. The reason we do that is the power cost is really cheap. I think it figures to like 6 cents a minute with no peak charges. So that's why we don't.
6 cents an hour.
6 cents an hour. I'm sorry, 6
Kil-
cents an hour.
six-
6 cents a
six-
kilowatt hour.
6 cents a
Yeah,
kilowatt
you got
hour.
it. So anyways, so Matt's got them broken down by groups. And then the mining rigs over that I showed you guys the pictures of, this is the live stats for them. So what these are mining script coins, so like Litecoin. And you can see so far today we've mined 74 bit cent worth, which roughly equates to $2,000. And then I don't know.
Well, you gotta look at the input cost too.
So if you look at the input cost here, the blue line is our money, and the low line is our power cost.
But you
So I
also
have
gotta figure out the hardware.
the hardware. There was a very substantial investment made in all of that.
When you buy like a Bitmain Bitmain sells miners specifically for Bitcoin. An S9 miner costs $1,200, and then the power supply costs $120, and then you got to ship it across from China. So it's $1,400 by the time it's landed in the United States.
And this too.
And like you're saying, these are specially designed machines that use like video cards for processing rather than.
Well,
These are actually the script ones are actually using ASICs, so there are ASICs for that script. But what we're doing here is called merge mining, and what that means is you see all the different colors and all the different names here. We're actually mining the most profitable coin at the time and selling it as soon as the block is discovered and matured. So we immediately turn around and sell it for Bitcoin. So that's how that works.
But yeah, you'd have $1,400 in a miner, and then you've got to power it.
And
So you usually look at a 6 to 10 month return on investment on a miner, but as each week goes by, difficulty goes up because more people want to mine because it's profitable. So your payments go down even if the price goes up. So you pretty much, you're fighting a curve basically, a curve of diminishing return on the miner versus Bitcoin's.
I actually took a video
Price.
of the power meter, and that bottom deal is actually, like the old style spinners, and you can see how quick it's actually going in a circle. Every time it comes back to the left is one complete circle. So I mean, that service is 900 amps worth of service, and we've almost got it topped out. Yeah.
But when you look at the NEM coin, NEM doesn't have all the miners. So that's the neat part about NEM is it's not so power intensive. The main thing with all the networks though is they're verifiable funds for a transaction between two individuals. So it's just like cash. If you're going to do the transaction, it's not going to go through unless you've got the coin. So it's almost like you're sitting there seeing the money before it comes to you. So it's really the most effective way to do any sort of transaction on the internet.
So yeah, here's since this guy started keeping track, you can see the curve of Bitcoin has generally been up.
What generally sets the price of Ether in Bitcoin? I mean, is it a community thing? Is it, because I read an article today that said, you know, Bitcoin that went over $2,800 was based on China now opening up Bitcoin transactions that they had closed since February.
There's a couple of theories. I think there's a couple of things. So last July, we had the halvening. So Bitcoin block reward used to be 21 or 25 coins. We have that now. So now coins are, when you discover a block, it's 12 and a half coins.
It still takes as much power to do it.
Yeah, or more.
Yeah.
And but the thing is I think we may be seeing the result of that. Japan also made Bitcoin recognized currency.
Yeah, they have funds that are specifically cryptocurrency related that are trading in Japan now.
In Russia, the third largest credit card company made Bitcoin an option. So, and
Because I said, you know, and everybody's reading online articles and whatnot, but they said when Bitcoin first started out, if you bought $100 worth of Bitcoin, when it very first was initiated, it came out, it was worth $72.9 million.
Well, when John gave his speech on Bitcoin the first time, he made the analogy with the guy who paid 10,000 Bitcoin for a Papa John's pizza.
Yep, it was the first recognized.
10,000 Bitcoin.
The guy paid 10,000 Bitcoin for one pizza. I don't know what that's worth right now.
It's like,
but
what was it, 20-some million?
I'm hoping he had more than 10,000.
Yeah.
He's sitting rich.
I mean, when I said look at this, that's one of the things for me to kind of wrap my mind around is what are the financial institutions out there that are sitting on $300, $400, $500 million or $1 billion in actual available funds and cash that are putting that into play? I mean,
Right.
for me to go and say, well, it's time for me to cash out and I've got $50 million in U.S. funds, isn't that kind of a hit? I mean, don't you think, to a financial somewhere? I mean, how are these guys, so if you wanted to go and say, we're gonna buy and sell Bitcoin, what's the dollar amount that you have to sit there or have financial access to be able to do that?
You don't have to buy a whole Bitcoin when you buy one. I mean, you could play
can
with
go buy-
$20 at a time if you wanted to. I mean, you don't have to go and buy a whole. You don't have to go spend $3,000 and then try to trade that. I mean, that would be unreal that would just be unreal to do. I think you could still play the $20 game and still make a lot of money.
Is it too personal of a question to ask you guys? You guys have a cashing out plan. You're getting all this Bitcoin.
So
how you? I know, knowing you guys, you just don't want. I don't think you just want to sit on it. You're cashing.
Well, I don't know what the way
I'm
this thing's
assuming,
going.
I'm thinking, you guys are turning this into gold bricks somewhere and putting it down a mine or something.
Well, we've actually used some of our Bitcoin to buy like new mining hardware, pay for hosting, things like that. But yeah, you can use Bitcoin to buy a lot of stuff like Dish Network.
yeah, Dish Network takes Bitcoin.
But you guys think bigger than that.
So
We're talking
so I
about
use
pizzas and stuff.
the BitPay card. It's a credit card. It allows me to load my Bitcoin straight to it. It's a Visa, and I got to pay taxes and stuff on all that, but it allows me to load it straight to a Visa card.
So you can go down to Casey's with
You can go down to Casey's. Yeah, one of my recent transactions was a pizza. I think I bought pizza with it once. So,
But it wasn't 10,000 Bitcoin.
no, it was not
No.
$10,000.
No, 10,000
That was a
Bitcoin.
really good pizza.
Yeah.
What's the transaction fee that Visa gets to load your card? Is it like a 3-4%, or is there?
Well, the transaction fee is normally given to the vendor. So today I sent $10,000 worth of Bitcoin to my BitPay, and I had to pay a $9 transaction fee. That was the miner fee. So, but generally the vendor, whoever your Casey's pays the Visa fee, right? Not me. I paid $10 for the BitPay card. That's.
And one thing that I've noticed in the past few months with the mining network itself is we used to make, basically whatever the block reward was for mining. Now most of they call them pools. That's where all the miners get together and mine as a group. So the reward's shared, because if you were mining as an individual, you'd have to mine a really long time to get a reward, and you might not ever get one. But anyway, the reward for a standard block is 12.5 Bitcoins. But the actual full rewards with transaction fees on Bitcoins have been ranging in the 15, 16, 17, and almost 18 Bitcoin range. So you're getting almost another 50% bump on top of the block reward of just transaction fees because the network's so active.
Right. So
that's actually pushing the miners to mine much more because they're seeing, a big uptick in their payouts.
Here's another card. It's called the Shift card. What makes it different from the BitPay card is it connects to your Coinbase account. That's another. That's an exchange. And what's different about the Shift card is when it connects to the Coinbase account, it uses the current price to judge your balance. It also lets you hold Litecoin, Ethereum, and Bitcoin as all part of your balance. So when you go to the store and you swipe it, it'll sell whatever it takes to make that transaction whole to Shift.
With your cards that you use, there's no, the transaction is instant. But if you're not using the card, there can be some latency versus, so like if I go and I want to buy something just out of my coin wallet, I don't have a card, if they accept it, and they scan my QR code.
Yep. So you'll know.
There could be a long transaction.
You'll still know within.
Yeah,
you'll still know within seconds if the transaction hit the network correctly. The person you're buying from will get an immediate notification that, hey, Dan just sent me this payment. It just takes what it takes longer to do is it has to be confirmed in so many blocks. And the confirmation is what's taking so long, not the announcement on the network that your transaction happened. And the most important thing right now is just make sure you pay a good enough fee. I think when Matt sent the fee the other day, blockchain.info, the website we use to send Bitcoins, did not calculate the fee correctly.
Yeah, blockchain.info just throws in like a standard like $2.65 or something.
You have to calculate
it. Doesn't really calculate as long as with like what actual. There's a website you can go to. I don't know the website address off the top of my head that actually shows transaction fees versus confirmation times, and there's like a happy medium in there. You can really put, if you wanted to send one block or one Bitcoin and put one Bitcoin as a transaction fee, you could. There's no limit on the transaction.
Right. It'll just get confirmed.
Like you can send 0 and just wait.
Yep. So here's we never talked about wallets, like how to store your Bitcoins. So we store some of them on blockchain and we store some of them in a hardware wallet. So here is like I use a ledger. It's a little tiny device that plugs in USB to your computer. You gotta enter a code. It works with the ledger wallet. And then here we use the Trezor. It's something similar, just a different style of hardware wallet.
So you keep so many coins physically on that device.
Nothing's really physically on anything, but what you can think of as stored on the Trezor is a private key. Your private key is stored on the Trezor. And so, if somebody broke into your computer, they could get access to where you're holding your private key for Bitcoin or for any coin. The private key is actually held on the Trezor, and so you can't get it.
Yeah, if you do an online wallet for any of them, you want to make sure that you enable all of the security features available for that specific wallet. Whether it's two-factor authentication, a secondary password on sending payments, things like that. Because it's like, if your email account gets hacked, oh, they read my email. If your cryptocurrency account gets hacked, it's basically like they're hacking into your bank account. But they can take it and take all your coins by just simply doing the transaction. But then there's really no way to trace it because it's a completely public network as far as the ledger on all these cryptocurrencies. But there's no real personal identifying information on any of it. So if you see somebody's wallet ID or transaction ID, you can go back and look and follow the coins all around, but you will never know who they actually went to.
But really, that's no different than somebody coming in and physically taking cash out of your drawer either.
Right.
Unless you have the money.
Yeah, except the difference is my computer can be in Spencer and that guy could be in Russia.
Right.
Exactly.
So
Now, does it seem like the Wild Wild West that have 800 cryptocurrencies going at the same time?
well,
I mean,
it's kind of like throwing stuff at the wall and seeing what sticks to some extent. And there's lots of different ideas with a lot of the cryptocurrencies to see like, we're gonna do this better, and hopefully that catches on. Like the top 5, there's quite a variance in what they're actually doing. Litecoin is similar to Bitcoin in that it just is trying to do the same thing Bitcoin does, but just do it faster. But the other 3 are pretty distinct in their actual goals. So, I mean, it would take forever to do research on all 800 and some of them and find out what their actual goals are. But
This one didn't make the list, but I'm extremely interested in it. It's called Zcash, and their theory is that the Bitcoin network isn't private enough, and so Zcash, the to address, the from address, and the amount are all encrypted. They're put publicly on the ledger, but nobody can read them.
huh.
So I had a question about, you guys were talking about how the Bitcoin transfer sometimes takes a long time.
Yep.
And it depends on how much you put in as far as the transaction fee.
Yep.
So,
And it also depends on how many transactions are going on at the network at that given time.
Yep.
There's
Okay.
some days where there's the transaction backlog of 200,000 or 300,000
so
transactions.
what is the back end that's handling the transactions that is,
The miners.
The miners.
So-
Every time a block is mined,
Mhm.
this goes back to the SegWit versus big blocks. Every time a block is mined, that information on the block, which is 2 megs
2 megs right now. Yeah.
on a block, is filled in with transactional data, and there's only 2 megs to fill it in.
so really,
They're running out of space every 10
it
minutes.
comes down to, they really do need more miners.
No,
Well,
they need more space
they
on the
need more-
blocks.
So in the Bitcoin network, you have miners, and you have full nodes, and you have clients. So the miner, has to connect to a full node, but a full node does not have to connect to a miner.
Okay.
And so the full nodes are keeping track of all of the transactions that are happening on the blockchain all the time. So they're basically reading it, storing it. When other peers come online, they basically send that data to the peers. They're not like authenticating the transactions, but what the miner's doing when it goes and shoves data into the block, it's shoving it into these full nodes. And so by expanding the block size to say 8 megabytes or 16 megabytes, it's gonna allow more room to shove the transactions in for the full node miners, or for the full nodes, not the miners, but the full nodes.
And when that miner mines a block and then fills all that block in with the transactional data, they get all the transaction fees.
Right.
So that's where we're going from 12.5 Bitcoin block reward to 16, 17, 18 Bitcoin.
It's causing
Block reward.
a huge problem in the Bitcoin network because the miners love the high fees, but the people using it to buy things don't like the long waits.
Yeah, because if you've got to put in a $6 transaction fee, it pretty much makes it so it's only a large purchase, because you're not going to spend $1.50 on a candy bar and then spend $6 to make the transaction.
Right. So hopefully, I mean, there's, like I said, there's a huge riff right now. And right now, what they're talking about is doing big blocks with segregated witness, which I just think they just need to do big blocks. In fact, in the source code, Satoshi Nakamoto is the alias of the guy who created Bitcoin, wrote a comment right above the line that says what the block size is. And he literally said, this is the code you need to put in to make bigger blocks, and here's the block height, how to do it at this particular block height. I mean, he knew that this was going to be a problem, but storage is becoming cheaper as we go into the future.
I just wish the guy would come forward and we just talk to him.
Yeah, right.
But nobody knows.
Nobody knows who he is.
Really?
Yep.
What's the alias?
Satoshi Nakamoto. This guy Craig Wright came forward last year or whatever, and they pretty much shot him down, proved that he wasn't. Because it said, if you are who you are, then move one of the genesis blocks, one of the beginning blocks, prove it, which haven't been moved, and he didn't. So
Sounds like the script to the next Matrix movie.
move the genesis block.
I don't. I mean, there's some cool like Bitcoin TV shows. There's one on Amazon. It's called The Rise and Rise of Bitcoin. If you want to check that one out, that one's pretty cool. There's a couple other ones I can't think of, but if you just type Bitcoin in on Amazon or Netflix, you'll get some stuff.
Is it considered money in the United States?
No,
It depends.
it's not considered not money.
Here's the thing with it. If you come to me and say, I'm going to give you $30,000 for Bitcoin, and I say, okay, and I take your $30,000 cash and I give you Bitcoin, then I technically need to be registered with the IRS for some money laundering fraud thing. So it is sort of regulated and transactional.
What if you give them Bitcoin for a horse?
I don't think they can regulate horses.
Okay,
It's
I didn't know.
the IRS, the General Revenue Service, not the Internal Writing Service.
I know about the judge in Florida saying I can't see it, touch it, so it can't be real or whatever.
Oh yeah. Mm-hmm.
And then I was looking at, when you were talking about Ripple, moving big blocks of money bank to bank, is
Yep.
like, that just sounds like, laundering.
Well, the thing is,
But
though,
is it illegal if you did have it?
yeah, the thing with that though is it's all institutional to institutional for the most part. So it's basically there's
And
a
they
set.
do everything legal, like,
Well, of
Probably.
course. It's Bank of America.
yeah.
I mean, they're like number 2. Anyway, it's basically them operating on a system that says, I agree that this has value, you agree that this has value, we're going to exchange funds with this instead of going through.
And if you think about it, that's what all money is anyway.
Yeah.
Most money's not paper in your pocket.
Currency has really very little actual value.
Yeah, go. If you got $1 million in the bank, go to the bank, try to withdraw it.
Yeah.
They're not going to give you cash. They can't. It doesn't exist.
What about it? You say there are no chargebacks on the
Right.
cryptocurrencies. If
All
you
transactions
buy
are final.
something- Huh?
All transactions are final.
What if there's a problem with the transaction?
Well, then they would have to do another transaction, but instead of you to them, it would be them to you.
Right. So similar to Visa, the law says Visa, if you buy something and the vendor won't do anything good, won't correct the action, then you can do a chargeback, and then the vendor gets a ding, and you get at least a portion of your money back. With this money,
And then
there is no
chargeback fee.
there is no type of security net like that.
And you're dealing with people who you might think are in Russia, but they're in Timbuktu.
Yeah, potentially. I mean, you got to be confident that the place. And if you go on the Bitcoin forums, there's a lot. There's what is it? BitcoinTalk.com, I think, has a forum all about different places where people buy things, and they'll say this place is a scam, this place is great.
Yeah. Speaking of scams, one of the probably most prevalent one is the by hashing time. There are a few legitimate hashing time sites you can go to, where you can, instead of paying money for a miner, you basically pay money to use somebody else's miner but get the reward. So they're basically guaranteeing a minimum profit, and you're taking the risk with the opportunity to make more money. There are some places that basically fake it. So it's something you want to, if you are considering doing it, want to be very thorough in your research prior to doing it.
So how long is this for? I don't know how long that's for.
2 years of Ethereum
2
mining.
years.
2 years, okay. You'd probably make your money back at that if the price stayed the same. And what you
Yeah,
can
but
do
is that
a-
$8.99, $8.69 a month?
I hope not. If it is, then you wouldn't make money. I think it's for the whole 2 years, right? 2-year Ethereum mining rig, yeah. You can go and, you can find, coin. Well, the Genesis mining, you don't need any because you're handling there.
All you're doing is you're paying somebody. So like where we pay somebody to host our miners, instead of this situation, you are paying somebody that already has the miners and is hosting them basically to buy the reward off of the miners they have. So instead of them taking the risk, you take the risk.
Sort of a reverse insurance policy.
Yeah, kind of.
It's a really good one. Crypto Compare. So here you can put in, you know, if you were going to buy or build a mining rig, you could put it in, put your calculation in. So, yep, and we were doing, what did I say, 700? Yeah.
Yeah.
So this
power.
is this. Oh, power cost. What's our power cost?
No, it's not.
4.5. If we'd stay off peak, it is. So you'd see with our mining rig at 150 mega hash a second, the profit would be $864.12 after power. I mean, if you cranked up the power to say 10 cents, 836.
Did you write some code to watch?
Yeah. So yeah, I did.
Well,
So Iowa Lakes, on here we're on Iowa Lakes Electric, and we are not on SMU out here. So we have to worry about peak.
one day a month, at any given time, the network will hit peak. When it hits peak, however many kilowatt hours we're using at that very moment, they are going to charge us $28 per kilowatt.
Yeah, it
So
really affects the price.
if we're using 100 kilowatts at that time, it's $2,800. If we're using 10 kilowatts, it's only $280. So-
The industrial plants live that way.
They have so interestingly, there's no good way for them to tell us that we're in a peak. Take it for what you think it probably is, you know, the price. But on their website here, they say this is the best way that you can know that you're going to be approaching peak or on peak. So I actually created a program that goes and monitors for peak and sends me an email or sends me a text message when peak happens. So doing that, I kill the internet connection where the miners are, which forces them to quit hashing, and we save the money, so we can keep our power bill at about 4.5 cents a kilowatt hour.
Is there anything you would change? Because you guys invested lots of research into this, and you've come up with some nifty things to make this work better for you. Is there anything that you've learned since you made this setup that you would change?
Yeah, don't spend bitcoins to buy stuff to make bitcoins.
Really?
Yeah, because you spend $1,000 of Bitcoin when it's worth $1,000, and then 6 months later it's worth $3,000. It makes you feel kind of like a fool.
I'm a big fan of, you know, you gotta spend it when you need to spend it. I differ with Matt on that opinion. So I don't hold the dollar for when the dollar's worth a whole bunch more.
You gotta cash out some.
I spend the dollar though, you know, when I spend the dollar.
Yeah, that's the only thing like I said.
But a lot of your investment in dollar amount, I mean, if you wake up tomorrow morning and Bitcoin crashes overnight and it's $220 tomorrow, I mean, you're looking at your payoff and your investment and all your stuff. I mean, you're not making $800 some dollars a month. You're down to what, $12, $13.
Right.
I mean, so your return on your investment. I mean, I think that's kind of the scary thing with people that look at it and they say, well, this is a bubble, or you know, it's a fad or something like that.
You know, the network has gone way up and way down, but what happens is there's a factor in Bitcoin called difficulty, and difficulty is set basically by how much hashing power is on the actual whole network in itself. So when the price goes up, more people get on the network. When the price goes down, less people are on the network because it's not as profitable. So it makes it easier for us to mine coin. So the profitability of the specific miners pretty much stays constant.
So if a guy's gonna do this out of his house, I mean, some things he needs to look at, number one is, what's his kilowatt?
What's the price per kilowatt hour?
Yeah,
And
and
if they have, so how much data are you guys pulling? So if I were to
About
say-
0.
yeah,
So there's not much
So
data.
think of it, so what we do is we submit what's called shares. Okay, so the new problems out there, the mining pool sends us a little bit of data. We sit there and calculate for the miners, or a full node can just be a full node sitting out there. You know, like when we mine against Antpool, they have a full node sitting out there running mining blocks, you know, sending the data, and then there's a protocol called Stratum that takes the mining protocol and turns it into a Stratum protocol, and that's how miners mine.
How underpowered would like a laptop or a PC be for mining compared to?
for Bitcoin, a complete waste of time.
Yeah, it's just, it'll wreck your hardware quicker. Ethereum and Zcash, you could definitely mine with that.
I just, like if you'd made a screensaver that ran
Right.
in the background and
When,
if it found something, you
when-
offered the person a t-shirt or something.
when we first started mining Bitcoin, we used graphics cards because there was no such thing at that time as a ASICs appliance for it. And there were a few that were like mythical creatures out there that were like $20,000 or $30,000 promising these huge hash rates. And I want to say, what was it, a couple hundred mega hash is what the graphics cards are supposed to do.
Yeah.
And now we have S9 miners, which are 13.5 terahash.
Right. And
So
your computer would do a kilohash or a couple on the Bitcoin network, but now on the other networks where it's harder to mine, that would actually work.
yeah, so
Okay, with Bayo or something.
yeah.
Any other questions? All right. Thank you.
Thanks for listening.
Yep.